What a roller coaster we've just been on. We've just had the fastest bear market, that's a decline of 20% or more, of all time. We've also had the fastest half recovery of all time for the world market. We've also had the most volatile stock market of all time, either by looking at the movements in the stock prices, or by looking at the VIX index in the US, which takes option prices, the cost to insure the market, and they went to their highest level of all time in this crisis, more than the financial crisis, the euro crisis, any other time. Normally when we get into slowdowns or recessions, the market can look back at previous episodes and try to figure out how bad it might get. This time around, completely unprecedented. We had no previous examples to look at, so naturally people panicked. Also, it was a human crisis, not just economic crisis, which puts a different dimension on things. And lastly, this time around there are much more passive investors, people who use exchange-traded funds or index funds to be in the market, and also systematic strategies, rule-based strategies. Now these type of ways of investing aren't necessarily long-term holders, and they might sell a bit faster than usual, which helps the market go down faster. There has been lots of good news. For one thing, central banks, rather than waiting for weeks and months and years to come in, they came in within days and weeks, with massive support from the financial system. The last time central banks bought assets, this time governments have come in and they directly supported businesses, jobs, households to get us through this very, very difficult period. Also, good news on the virus front, the infection rate is starting to slow down. Some countries, which have had very strict lockdown policies, are gradually starting to relax those policies. So there's definitely light at the end of this tunnel. The economic data that's coming out now is very, very bad. All the jobs numbers you've seen, that will continue to be very weak. Companies are releasing their earnings. These are also very, very bad, and that will continue for at least a few months. Also, it's not our view, the virus could rebound again in Asia and Europe, and that will be a big worry. Now, in our portfolios, we don't try to predict these things. We look at how dislocated the markets are, how cheap the value we're being offered is. In March, things were definitely attractive. So we gradually, in our centrally managed discretionary portfolios, start to increase the weight of stocks in those portfolios. We intended to continue in April. The market came back up so fast that we paused. We're not selling those stocks, but we're holding on and proceeding with caution.